Let's get a market master to tell us his views on these and all other issues. Harsha Upadhyaya, the CIO-Equity at Kotak Mutual Fund, joins us now as the market master for the day. Good morning, Harsha. Thanks much for joining us. The currency is clearly rattled by the Chinese devaluation. In the Indian stock markets, at the moment, only the metal stocks are reacting with about a 1–1.5% cut. Should we worry more?
Yeah, I think already the global growth is very sluggish, as we all know. And in this situation, if there is a competing currency which is going to gain, then there is an issue. So to that extent, I think one needs to still focus on domestic plays rather than export plays. And we are currently positioned that way in our portfolios, and that helps us in this scenario.
Okay. Harsha, hi, good morning. Can you just elaborate on that point further? Because, you know, we've seen a lot of sectors like tires, metals, etc. get impacted because of the dumping that we've seen of Chinese product. Now with the Yuan devaluation, there is a bigger worry on that front. Do you completely avoid some of these spaces, or do you use it as an opportunity to perhaps, increase allocation, hoping that in the due course of time, things will get better?
At this point of time, we do not have any metal exposure. That has been the situation for almost last 2 years or so. So to that extent, the recent changes in global economy doesn't affect us. But as far as tire stocks are concerned, we have a couple of them in our portfolios. Yes, the chances of Chinese dumping increases at this point of time. So we need to relook at those issues and evaluate once again in terms of what is the value proposition that we get at current valuations.
Okay. What's your take on the results season? Has it disappointed you all? Have earnings come in lower than expected? What's the comment sectorally as well?
To begin with, the expectations were quite muted at the beginning of this quarterly result season. As for that, I think more or less the results have been in line. So I won't say that it's a great quarter. It's a very subdued quarter in terms of earnings growth momentum. There is hardly any earnings growth on a year-on-year basis, which was the expectation as well. At the top line, there has been a negative growth, and that's coming mainly because of the fall in commodity prices and also the pressure that is coming from negative WPI. I think the silver lining in the whole earnings season has been the increase in EBITDA margins across sectors. That has come through because of increase in gross margins, mainly aided by lower commodity prices. As long as there is some volume uptick, this increase in EBITDA margins can continue. But the worry is whether the revenue growth uptick will come back to Indian corporates. Our belief is maybe one more quarter of a sluggish top line growth, but from December quarter onwards, aided by festival season demand as well as some of the low base effect of last year, we should see reasonable bounce back in revenue as well as profitability.
Okay, Harsha, hold on to that thought. Your reaction, would you dump the Chinese, the tire stocks?
No, I don't think we will take any knee-jerk reaction on this. We will evaluate the whole issue once again and then take a view. As it is, we do not have any exposure to metal stocks, as I mentioned earlier. So to that extent, our portfolio is quite insulated from what's happening in China. It's only a marginal weight that we have in some of the tire stocks that we need to take a relook at.
Okay. Given the kind of results we've got, a terrible BHEL number, a good Cummins number, how are you incrementally shifting your sectoral positions? Would you up capital goods? Would you up PSU banks? What is your next incremental upping sectorally?
Clearly, there are two themes which we are evaluating at this point of time, and most of our positions are towards those two investment themes. One is the likely increase in consumption, both in terms of auto sales as well as consumer discretionary goods. We believe that the 7th Pay Commission, which is going to table its report very soon, is going to be a big boost for consumer discretionary demand. We believe that anywhere between $10 to $15 billion of incremental consumption can happen over a period of time because of 7th Pay Commission. So that is one space where we are currently positioned, as well as we will look for new opportunities in the same sectors. So that includes auto, consumer durables, and a little bit of urban FMCG. As far as, and even banks, some of the retail banks could play a role in terms of housing loans and auto loans, etc., because the ability of the people who get higher increments will increase in terms of their ability to take home loans and auto loans, etc. The other theme that we are currently looking at is, after a lull of maybe about 4 to 5 months in the last financial year, government has started to spend once again in this financial year. So we have already seen about 4 months of uptick in terms of public spend. And that should benefit all the allied sectors, including cement, capital goods, etc. So these are some of the areas where we would look to evaluate new investment opportunities.
Okay, by the way, the market is now falling some more. So the Sensex is down about 80 odd points and the Nifty is down about 0.3%, and all the metal stocks are getting hit quite hard at this point in time.
But there's some very good news coming in from Shireen. Senior Congress members support GST bill. Party leadership will take the final call. But of course, the House will have to be allowed to discuss the bill. Odds are higher that the bill will be passed if it is allowed, if the discussion is allowed at all. So that's where things stand. These are fresh points that Shireen has filed. Senior Congress members support the bill. Final call with party leadership. Back channel talks are on with Congress leaders to support GST bill. If the House is allowed to discuss, odds of passage are very high. Buzz picking up on special session being called for the GST.
All right, well, we'll try and get more details on that. But before that, Harsha, I wanted to ask you about the PSU banks, because today we get SBI's numbers, and ahead of that, there's been buying in that stock. In fact, the entire PSU banking lot has, at best, been has seen a trading pop on the upside. But how are you, as a long-term, stock watcher, entering into this space? Is this a good buy for the longer term, you think?
Well, we have not increased our position in PSU banks for quite some time now. So we do have a couple of larger PSU banks in our portfolio, and we continue with that positioning. Our belief is, while there have been some moves by the government in terms of appointing a senior management at PSU banks, as well as recapitalization, etc., are going to take place. We will watch the space closely, but at this point of time, we are not willing to increase our PSU bank holding, as we clearly see that the biggest issue, which is the issue of asset quality, still continues to be a main concern.
Okay. Harsha, let's talk the positive news about mutual funds. You all have been receiving a torrential amount of money. What's the extra assets under management at Kotak itself? And where do you see this? How much of an AUM gain do you see the industry or your funds by, say, the year end or in 12 months?
Well, for the last several months, we have been seeing about 5,000 to 6,000 crores of net inflows into equity funds in the industry. July month was little subdued, maybe at around 3,000 to 3,500 crores. Overall, the trend continues to be very positive, and if you compare equities with all other asset classes, let's say gold, real estate, or any other asset class, clearly equity stands out both in terms of valuation and the prospect of making more money with a zero tax advantage as well for a long-term investor. So clearly, given the fact that equities are under-penetrated in our market, the current set of flows can continue into industries is what is our belief at this point of time.
All right. Thanks, Harsha, for joining us. We'll let you go now. That's the word coming in from Kotak Mutual Fund. Thanks a lot for being with us. Well, we take a break on that note. Still